The CPI numbers are in, and it wasn't good. We're going to talk about what happened to the market this week and what is going to be happening next. Good evening, my fellow Riz Elite members. This is Chris with Riz International, and you are watching your weekly market recap. Riz is not able to join us this evening, but that is all right. We will soldier on and move forward without him. It was quite a week in the market, to say the least, and I'm not going to say I told you so, but Riz and I told you so to be very careful with this rally and make sure that you were selling into it if you had open positions that were in the green. And then the CPI numbers came out on Tuesday, and yeah, it was not good at all. Everyone was expecting about 8.1. That was the expected number. What was reported was 8.3. And as you can see here, on Tuesday, we had the single largest loss in the S&P 500 since, I believe it was April 2020, when everything went to crap with COVID. So, I said the nasty C word. The YouTube overlords will not appreciate that. But yeah, massive dump in the S&P 500 on those CPI numbers. And we basically just continued for the rest of the week. On Wednesday, we kind of had this doji day where we just kind of like sat and we kind of ended up a little bit higher. And then Thursday down and Friday down even more. Pretty much, to be honest with you, we are expecting another rate hike here very soon. Let me pull this up. I've got the data in front of me. It's Wednesday, actually. And right now they are expecting 75 basis points. And I think that's part of why everybody is freaking out and selling into this right now, because everybody thought things were getting better, right? We thought that things were going, in the right direction. Oil was coming down. And so the prevailing thought was, okay, well, oil is coming down, and oil was being a big part of the CPI numbers. And yeah, it didn't quite pan out the way that everyone had hoped. So huge dump in the S&P 500. We broke below this 3,900 level that we talked about on our last webinar, and it was a bit, if you follow chart patterns and things like that, some might say this is a bottoming hammer, meaning like we're hammering out all the shorts and people are buying into this dump, people covering their shorts or their put options, things like that. Hard to say for certain, but honestly, with rate hikes expected on Wednesday, it's not good. It's really not good. So we could definitely see a move further down, this week, especially if they do go for the 75 basis points or if they go even more. Now, Riz would say that it's unlikely that they will do any more than 75. I'm not taking it off the table, but, more often than not, Riz is correct on these things. So I will err on, agreeing with him more than not. But yeah, definitely expect a rate hike on Wednesday. And then we had quite an interesting thing on FedEx. FedEx got absolutely murdered here on Friday with earnings. And yeah, down 33% on their EPS, their earnings per share. Revenue down a good 1%, and there were essentially, concerns of a global economic slowdown. And I think everybody is feeling this, and these shippers are going to feel it just as bad. So FedEx getting absolutely wrecked, ridiculously huge dump, 21% in one day. That is crazy. Yeah, glad we weren't long FedEx at this point. At least I'm not. But yeah, so going into this week, we're going to be incredibly cautious, and we recommend you be incredibly cautious as well in this environment with everything, looking like it's going to continue pushing down south. We need to be very, very careful. If you're an elite, Riz released an absolutely amazing dip buy list and a complete strategy for where to buy, where to deploy your capital, and what he would recommend. So please make sure, if you are an elite, that you are using that and you have that available to you. If you aren't an elite, well, you missed out. That's all I'm going to say. You missed out, and we're not going to talk about where those areas are, because that's for our elite members. There has to be something special for that. So hopefully, if we open up membership again and you're not part of elite, you can get in. But I think that it's really worth it, guys, because this is pretty much a roadmap what Riz is going to give you in Elite for how to profit in a market like this. And that is what we're going to be doing. So moving on here, let's take a look at the breakdown for the S&P 500. Kind of more of the same like we talked about last week. Energy is really kind of holding steady here right around the plus 37% area. We had a bit of a spike earlier on, and then it kind of came back down with the market dumping. Utilities are holding very strong here at plus 5% on the year, and everything else is below the zero line. Now, healthcare has been, outperforming the S&P 500 for most of the year so far, and it continues to do so, but still down 8.6%. Financials is hanging right in there with the S&P 500 down 16. The S&P is down about 19% now, so back almost at that 20% mark. And real estate down 21%, and tech getting absolutely murdered. And I think tech got hit the hardest on Friday with some of the things going down with tech. And of course, obviously FedEx got wrecked too. But yeah, tech really getting the bad, the rough end of the stick, let's put it that way, this year. So, energy still continues to go high with, increasing energy prices. I know people in the UK are paying quite a bit more. I think they said their energy prices have gone up like 80%. And, we're seeing a big push in energy here in the United States as well. So not 80%, but definitely high, to say the least. What is not high at the moment is oil. Oil is still continuing on this downtrend here, though I have started to see prices dip a little bit in my area. Not sure what they're looking like in your area. If you want to post that in the chat, tell us what gas per gallon or per liter is, depending on where you're at. And of course, you can post that down in the comments if you're watching this on YouTube. But oil just hanging out right around here in this $85 mark, but looking very bearish at the moment. Now, I know Riz was talking about possibly taking a position in oil. He hasn't done so yet, last I checked. But yeah, very, kind of important area here for oil. We pushed below it, came kind of back up, and then we kind of are just hugging this area right now. Let's see, where did we close exactly on Friday? Looks like we closed at 84.76 per barrel for light crude, which is the good stuff. Now, gold is taking a beating this week. Now has broken down below our 1680 support area that had held for well over a year. At this point. So will be interesting to see if we continue to dip lower. I'm just kind of looking back here on the historical places where gold has been to kind of get a better idea of where we may be going. So, but gold really taking a pounding here over the last week or so from where it was. Again, we don't hold a position. We don't hold physical gold at this point. So, but just something to kind of keep an eye on. I think we're definitely more keeping an eye on oil at this level to see how, oil continues to behave moving forward. Gold is going to do what it wants to do. Bitcoin, I feel like more of the same. We just keep hanging on to this 20,000. We just don't want to give it up. But we are approaching this point of what you would refer to as confluence, where you have multiple technical indicators intersecting at the same point. You'll notice that we have the 100 moving average right here hitting up on, if I remember right, my moving average is the 50. Is sitting right on top of each other. So that's creating a lot of resistance overhead. We also have this downtrend that we've been in since we hit the highs last year in November, and Bitcoin has just been selling off into that. Now, you can see we have been in the doldrums on Bitcoin since June of this year. We just cannot get out of this channel between 20 and 25,000. So it's going to be interesting here moving forward. Once we get closer and closer to this line, which direction it's going to break. So no one knows for certain. We'll definitely be keeping an eye on it, but again, something we don't currently have a position in. That is it for the recap portion of the webinar. I want to go ahead and open it up to questions for our people who are here live on the webinar. Of course, for all of our elite members, highly recommend you try and make the webinar if you can. This is a great time to interact with myself and Riz when he's here. I hope Riz is having a good evening. I know he said he couldn't make it this evening, but would love to field your questions. I see a couple of you are typing, so I will let you get those questions in, and we will tackle them. Okay, we got a couple questions here. One, our thoughts on AMD and ECL for long, and can we take a look at PayPal? Absolutely, we will take a look at all of them. Let's start with AMD, our favorite here on the channel. We have traded this multiple times over quite a long time period. So AMD looking like it is kind of finding a bottom here around this 73, 75 support area that has been somewhat, important in the past. Obviously, we're still below the moving averages, but we do have a lot of area to move up. Now, I would say being very careful, kind of getting in this now, especially with the concerns over everything going over in Taiwan and things like that. Chip makers are getting pretty, pretty worried about what's going on there in the South China Sea. So let's just be careful with that. I mean, if you want to take a starter position, this is a fantastic price for AMD. I would say at this point, it's pretty undervalued for, what they offer. Earnings have been spectacular. Over the last couple earnings periods, they're doing great. It's a great company, but it's really suffering from the market conditions right now. Looks like we don't have any really major catalysts coming in, but we're definitely approaching this oversold area on the RSI. So it looks like a pretty decent spot, for a potential long position. I think that, if you have a longer time horizon, especially if the market continues to roll, given the potential announcement on Wednesday of another rate hike, we could see more downside on AMD, but it does seem to like to hold to this area here around the 73, 75. So not a terrible spot. Okay, talking about ECL, he said some people from his house bought in on this. So Ecolab, I know these folks. So yeah, Ecolab getting pretty hammered here. Looks like post-dividend, they lost a bit. And I've seen this a lot, actually, when you have a dividend paid out on a stock. Oftentimes investors will see that as money leaving the company. And so sometimes it will dip a bit post-dividend payment. So we're late for that ex-dividend, sadly, so we won't be able to cash in on that. As far as taking a starter position on this one, I mean, it's okay. I'm not super enthused about it. Earnings have been a bit of a wash lately, though revenue seems to be going up for the most part. Not here, not in February for last year. So, as far as, this is a company, I'm not too familiar with the fundamentals on this. It doesn't look terrible. It doesn't look like it moves a lot, all things considered. I mean, there is a decent range. I don't think we're going to get back to this 240 area anytime soon. It'll definitely take some time. But I mean, if you were looking for, something to maybe take a bit of a starter position in and see if we can't get a bit of a reversal here, it looks like we've kind of come down before to this area around this 154.50-ish area. So definitely an option there, especially if that holds and we see a rebound off of that. That could be a great indication to go ahead and keep, maybe take a starter position and see if we can't push back up, maybe to this 170, 173 type zone. It's not an unrealistic goal, in my opinion, especially if we find some support. But if we continue to sell off in the market, obviously hold tight and let's chill. But definitely a good couple of setups. I like AMD the best. Probably because I know it more. And, if I'm just being fair and honest, I would say I know that security a lot better than I know this one. So I'd be more comfortable with the AMD position. But again, if we do find support here around this 155, 154.50 area, and we do see a pretty nice, rebound off that, could be a good little time to jump in on it, especially if we start to rebound ex-dividend, which it does appear to what it likes to do for the most part. We can't started rebounding here off this ex-dividend date. Maybe, if we start to look perky on Monday, might be a good spot to jump in on it. All right, everybody's favorite, PayPal. So PayPal finally getting a little bit of a boost here. I know that a lot of our members are in this. They've been in it for a while, and it's been just getting absolutely hammered. And yeah, it kind of sucks. We've lost over 50% of our value on PayPal here in just, the series of, since about July of last year. Let's see where we are now. Yeah. Well, that's a nice number. We'll just call that minus 70. We'll say about 70% of our value here on that. And I mean, PayPal is just kind of, we've had this nice little run up and now we're going to consolidate. And so I would say a nice thing seeing here, the moving average is starting to perk up a little bit, 200 starting to flatten out. We're kind of keeping an eye on this one. Of course, we're long. We still hold this one long. Riz holds it long, rather, I should say, in his account. And, that's the God's truth. I'll tell you that right now. So he's got all these positions that he says he does. And I see your question there, Panos. I'll get to that in just a second. But yeah, I mean, this one is just kind of frustrating, but maybe we have finally found the bottom. And that is definitely a pleasant thought. We'll notice even with this huge move on Friday, we didn't get too much of a budge in PayPal. So, I think we're getting that area where we have found the bottom. which is right here around 70. And we're starting to, make that slow grind up. Now, of course, if the market continues to sell off, it's going to not, I doubt you're going to see this one go up. Let's be honest with that. But, definitely a positive sign here that we have made this leg up, this initial leg up from 70, and we're holding in this 94 area. That's a really good sign. We're holding above the moving averages. The 50's crossed over the 100, which is great. Hopefully soon enough, we'll see the 100 start to creep up over the 200, which will be a very good sign indeed. For those of you who are not familiar, if I'm not mistaken, the death cross is what they refer to it as when the 100 crosses underneath the 200. So that's always a very bearish sign. Bullish sign would obviously be the opposite. Next question is, what's on our watch list for this week, even if it's not on Riz's list? For me personally, I'm just keeping an eye on a couple of the big names. Nvidia is one that I always like to keep track of. And obviously they got hammered here over the last couple months with everything going on. But this is one I really like. I feel like this is a pretty good solid stock, honestly. A good company. I like the company in general. Their graphics card is in my PC that I'm transmitting from right now. So again, maybe a little bit biased, but what can I say? We all have our favorites, right? We have our things that we like. One I've been keeping an eye on lately is Walmart. Walmart in the past has been pretty solid around this 136 area. If this can push over it and get over the 200, you'll see here we made an attempt here and then we got sold off into, but we had a nice bounce off the 50 and the 100 here. So, I'll be interested to keep an eye on Walmart here in the next couple of weeks. That could be another potential one for you. Again, I'm not recommending that you take any of these, nor have I personally taken any of these. I'm just telling you what I'm keeping an eye on at this point. But those are the two that I'm watching. I don't know exactly what Riz is watching. I'm sure, honestly, one of the things that he's watching primarily are these ETFs that we've been trading fairly regularly. We talked about them last time, XPXS, or otherwise known as extra small, and XPXL, or extra large, which are the 3x leveraged ETFs for the S&P 500. These are ways that you can play the SPY without, paying several $100s per share, but also they are leveraged, so they do have their mathematical decay, so be very careful about that. Lloyd wants us to take a look at Visa. All right, he says, looks like a solid spot to buy in, pending market reaction, of course. I agree with you 100%. This looks like a really solid area for them. This has been, pretty historical support and resistance area in the past. We had a hit here. If they can push over that, I think it's definitely looking pretty solid. Down here, let's see. We're kind of bouncing off nowhere here. Though you could say that there was a bit of a hit in this area before. So yeah, I think honestly over 193, if we continue to perk up on Monday, yeah, I like it. It looks like a pretty good spot to buy in. Really solid bounce, even though the market was selling off. Looks like people were buying in on Visa here, approaching the oversold area. So we could see a bit of a technical bounce here. I would just keep it on a tight leash. We have seemed to be with Visa in a bit of a channel here. We seem to be kind of stuck right around this 218 area at the most, but I would be looking to kind of get out more around this 205, 204 area. We've got all the moving averages sitting here. Now, of course, that's not a hard and fast rule, but you can listen. I mean, look, you see what happens, guys, when we get close to these areas. There's a lot of buying and selling going on, and it's just a good spot to consider taking profits, in my opinion. So, yeah, I like it. Looks like a pretty solid bounce on Friday. Let's see how the market behaves on Monday, and could be a pretty solid one. Can we chat about Google's $3 billion fine? Was that the antitrust lawsuit, or was that something else? This one I'm not too familiar on. All right, so we did some digging, and we found it was the EU antitrust lawsuit. Google lost their appeal. There's about a $4 billion fine. It was about 4.125 billion euros, and basically saying that their Android system was built to basically crush the competition. And I mean, let's be honest, a lot of these social media companies and a lot of the companies nowadays are getting in that area of, being in the zone of being a monopoly. I mean, let's look at Amazon. Let's look at the Facebooks out there. Google's another great example. A lot of questions as far as, suppression of users, censorship, things like that. And I think, in my opinion, I think this is a good thing. I think we need to have more competition in the market space. I think that drives innovation. I think that makes, for a better market, a better free market, is we have competition. We should be, moving away from these monopolies. And sure, 4 billion, I'm sure Google's got that sitting around in the couch cushions where they can just chuck that out to Europe. But in my opinion, I kind of feel like this is a good thing. Now, Google fans may be like, oh, it's unjust, they shouldn't have to do that. But we've seen what happens with monopolies in the past. All we have to do is look back to, Carnegie or Rockefeller or things like that. All those things that we learned back in history school, our history class back in the day, where they could basically manipulate the market. And that's why monopolies are typically not a good thing, because people will take advantage of it. So in my opinion, the more competition we have, the better. But I mean, Google's still going to be the top dog. I mean, let's be honest, as far as search engine is concerned and things like that, Google ain't going anywhere. I'm doing this on Google Chrome right now, so, there's that. And I'm not shilling for Google at all because they don't pay me anything. I can promise you that much. But we'll have to see what happens on Monday as far as that's concerned. I'm guessing this is more of their fine day when that came out. Of course, I know the market took a hit too here with interest rates, CPI data. As well on Tuesday, and that was kind of following the market. But honestly, I'm for it. Let's break up some of these mega corporations into smaller things, and let's get some innovation. Let's get some new stuff out there, and kind of help drive technology where it needs to be, which is moving forward. I think it's a great thing, and let's let the little guy have a chance every once in a while. I think the dreaded P word that happened back in the year of our Lord 2020. And that is a term that gets flagged, by the way. It crushed a lot of small business, and it let some of these giants really thrive a lot. You look at, like, why was your local Ace Hardware closed while Home Depot was open? That's just straight up favoritism, in my opinion, and not acceptable in a free and open market. So yeah, I'm totally cool with that. Google can chuck that money out to the EU. Hopefully they use it in the right uses. Guessing they probably won't. But I'm all for it, honestly. Let these big companies take a little bit of a backseat. Let the little guy have a chance, and let's drive some, let some other people have a go at it. I'm pretty sure that Bezos is, not going to be hurting over at Amazon at all if, he's broken up a little bit. But we'll see. We'll see what happens. But, as far as the fine is concerned, I think it's probably justified, in my opinion. So, but I want to thank everybody, of course, for coming out. It was really great. Great questions, as always. Make sure if you're part of Elite, you're checking in on Monday, because it's going to be a wild week, guys.